You're doing okay today. Straight away, back to business. I'm going to place an order to sell short euro. The price I'm looking for 118,975. Okay, I'm looking to sell at 118,975, just right here. So if you're looking to sell short euro, please place an order and then stay with me, and we will complete together this trade. We'll make a profit on it. Okay, if you want to get a strategy, you can get it from our website, company.co.uk. We still have places available for 15 minutes sessions. That's free. You don't have to pay anything at all. So you're welcome to register at our website, or you can find banner on our streamer. Okay, speak to you later.
Friday nights late or Sunday mornings early, and Bank America is raising wages there. Joining us now for more on that is Tom Metcalf from our banking team. So Tom, what's driving this? Is it really the Archbishop of Canterbury who's telling Jeff Staley how he should run his business?
Yeah, well, it's certainly true that a lot of folks you wouldn't normally expect to be opining on something like this are definitely getting interested. So, I mean, it's a perennial topic in banking, and I guess the reason it's been particularly high profile recently is probably with the pandemic. I think a lot of these more junior bankers are finding it extremely hard to sort of switch off. I mean, you know, as that Goldman deck suggested, that, you know, they might be literally going to bed for a few hours and then straight back to their screens, and, you know, just doing that for 20 hours every day, week in, week out. And I think after about a year of that, you know, the cracks are starting to show. So there's that kind of pressure from within. And then obviously, yeah, when you have someone like the head of the Church of England weighing in, I think a few CEOs are probably starting to take notice as well.
The pressure from within doesn't get to be blown off also is something that I've been hearing from a lot of bankers. Like, you know, in the past, they were working these insane hours as well. They did this last year, they did this 10 years ago, they did this 20 years ago, but they all got to go to the pub with the other junior bankers and kind of blow off a little bit of steam. That kind of social aspect is missing, and maybe that's why, at least this is what people are telling me, it's been highlighted this year. Are you hearing that as well?
Yeah, no, absolutely. And it's kind of an interesting thought, really, because, you know, that may well be why you have seen folk like David Solomon of Goldman saying, you know, he's keen to bring everyone back into the office. I think there's a recognition that, particularly for some of these kinds of work, you know, right now, I think a lot of the analysts are kind of just getting the negative side of it and not able to sort of get the, you know, comradeship or sort of the social aspect that at least sort of...
Okay, traders, position close. Sorry, open position. We didn't close yet. We open position at 118,975. That's a short position. All of you who decided to trade euro, you're in. So stay with me, and we will go through this trade, and I'll let you know what's going to happen next, when we're going to place stop on profit, or when we're going to add another pair, another position for euro. Okay, well done, guys. Yesterday we did quite a good trade on euro, so hopefully today it will be even better. Stay safe.
Welcome back to the European Open. We are a half hour into the session right now, and we're looking at a FTSE that's off almost 0.25%, a DAX that's down a little bit more than 0.25%, the CAC 40 little changed in Paris. Let's take a look at which sectors are on the move on the broader stocks 600 benchmark itself down a little bit more than 0.1%. You see consumer products, and is it consumer products and staples? I never get the letters right. Ever since S&P went to abbreviations, I'm not 100% sure, but I'm pretty sure that's a staples thing there. Then industrial goods and services, construction materials, all down, or all up, I should say. On the downside, insurance, personal consumer drugs, and grocery stores are gainers as well as losers as well as telecoms. So a real mixed bag today in terms of what we see moving on the GRR. Let's get to the Bloomberg First Word News. Laura Wright, save me in London. Laura.
Anytime, Matt. So UK Chancellor Rishi Sunak is under pressure after revealing he pushed his officials to consider helping Greensill Capital following a request from former Prime Minister David Cameron. According to text messages released by the government, Sunak told Cameron he'd asked his team to look at ways to give Greensill access to the state's pandemic corporate support program last year. Sunak maintains he followed all the correct procedures. More uncertainty for the UK travel industry. The Department for Transport says COVID testing and quarantine regimes will be compulsory according to whether a foreign destination is rated green, amber or red under a new system. But the government says it's too early to say which nations will fall into what category or whether travel will resume in mid-May or at a later date. The UK has granted asylum to Hong Kong pro-democracy activist Nathan Law, a move likely to fuel tensions with China. Law fled to London last year after Beijing introduced sweeping national security powers for the Hong Kong government. Beijing accused the UK of sheltering wanted criminals. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt.
Laura, thanks very much. Laura right there in London with your First Word News. Now, Credit Suisse's former CEO said the bank should not be judged on the Archegos fallout alone. Brady Dugan, who ran the lender from 2007 to 2015, cites the company's past successes in risk management, including during the 2008 financial crisis.
It's clearly, issues around risk are extremely important. They take a lot of focus. Large financial organizations are complex. And so, clearly it does take a lot of focus. It takes people who really understand the business and are focused on it. And yet, as you mentioned, with large complex organizations, it's not unique that these issues come up from time to time. And I would say, as you say, on Credit Suisse, I'm not involved in it. I don't know any more than a man on the street. And obviously, I'm a big booster of Credit Suisse as well. So, I have a perspective on it. And I do think, they have great businesses, great franchises, a lot of great people. I think that, clearly you kind of have to put that in perspective. But it definitely is it's something where you also have to have really the DNA and the approach within the organization. And I would point out, for instance, at Credit Suisse, you may recall, through the financial crisis, 2008, Credit Suisse was one of the banks that did not have any government bailout and was considered to have managed, one of the best through that crisis. So, there is a lot of good DNA around risk management there as well.
I was actually going to mention that because you did manage Credit Suisse.
Okay, guys,
through that.
We're going to place stop on profit for euro. The price I'm looking to place 118.955. As you can see, this is as simple as that. This is all about small profits, relatively small profits, but you will do it constantly, every time on different pairs. This way you will make a profit by day trading. You don't have to wait until it will double in price or triple in price. Small profit, this is enough, and move on. Small profit, this is enough, and move on. So right now, we have 2 pips in profit. In our case, it will be £200, but it's not yet. We didn't fill yet. So if it moves lower, we will exceed. We will put even higher stop on profit. We will try to make as much as possible from this trade and from our position. So if you decided to follow this trade, please do so, and please place stop on profit. And whatever happened, as I always said, you will not end up in loss. Good trade. Well done, guys, all of you who decided to place this trade.
Remember that swaps are
you're already in
used
profit.
to get leverage that at the low end of estimates was as much as 5 times leverage, and estimates do indeed go much higher than that. He didn't have the collateral when those margin calls came. So in order to rein that in, what Credit Suisse is doing is for their hedge fund and family office credit clients, they're no longer having static margin requirements. That means they're no longer going to say, okay, give us this fixed amount, and in return, this is the exposure you can get in terms of size of positioning or account. Now it's going to be dynamic. So they're going to look at the risk of the underlying positioning itself, be it volatility, be it concentration, and that will dictate how much collateral they have to put up. In all likelihood, this will lead to just more collateral required by clients and potentially lower profitability if it means they get less access to leverage.
All right, so what other areas is it possible that we're going to see reforms in? I assume that regulators are going to be looking hard at family offices, but also on the banking side.
I think that's totally right, Matt, and I think that's part of the reason why we can't necessarily just yet write this off as just a Credit Suisse story, because if regulators are looking into this, this could be a harbinger of something the entirety of the banking industry is perhaps going to have to enact. And when we think about things regulators have looked at over the past few months, they've issued warnings about SPACs, they've issued warnings about CLOs. These are two areas which Credit Suisse is highly, highly involved in. Sure, it doesn't have any ties to Archegos, it doesn't have any ties to Greensill, but there are other areas of risk that Credit Suisse perhaps will have to re-examine. Of course, the new chair comes in, assuming he is voted in at the end of this month. Thomas Gottstein has said that he will bring in a review of their strategy. So, there are potentially other places that Credit Suisse could be looking at to reform at.
All right, Danny, thanks very much. Danny Berger, continuing to cover the Credit Suisse Archegos saga for us. It's now been 2 weeks since that story broke, and the cover of Bloomberg Business Week really breaks down Bill Wang, who ran Archegos, in terms of, who he is and how he acquired so much leverage, his successes, and his gigantic failure. I highly recommend reading that, and then probably being done with the Archegos story, because I'm sure you've heard quite enough. Coming up, demand for chips is surging, but so is the industry's environmental impact. Each new generation of semiconductors requires more energy, water, and greenhouse gases to create. We'll look into that story next. This is Bloomberg. Welcome back to the European Open. We are 41 minutes into the session, and we're looking at kind of a soft day after, the FTSE's had a great week, especially compared to the softness that we've seen on the continent and in the U.S. Now it's sort of taking a breather here, down 2/3, almost 1/4%. The DAX is down almost 0.2%. So we're down a little today, but of course things could change on a dime, given we're all watching the Fed so closely. Federal Reserve Bank of San Francisco President Mary Daly remains bullish on a rebound for the U.S. economy, but warned there is still a long way to go before the recovery is complete. She spoke exclusively to Bloomberg's Kathleen Hayes about the risks on the horizon despite stimulus.
I had penciled in a little more stimulus than the Board of Governors staff, as you've referenced, and expected that to be a lift to the economy. So overall, it materialized in the way that I more or less expected. And overall, I haven't really changed my outlook. The truth of the matter is that the fiscal stimulus, along with the extraordinary measures that the Federal Reserve has taken, along with getting COVID behind us a little bit and moving into a light at the end of the tunnel scenario, we really are seeing a lift to the economy that is positive and most welcomed.
Well, and certainly the jobs report, just about 1 million net new jobs added, and many economists are saying probably another 1 million in the next month and maybe after that. When you look at that, does the economy maybe start to look not just, maybe not better than you hoped for, but better than you were actually forecasting and looking for?
So I've been pretty bullish on how the economy initially starts to rebound. If you think back to last summer when we were able to get warmer weather and get COVID to subside a little bit, people were eager to come back out. Consumers wanted to spend. People wanted to open up their businesses. And so that really caused a burst of activity, both in terms of output, but also in terms of employment. And I expect that sharp rebound to also take place. It'll take several months of millions of jobs, though, at the jobs report to get us back to full employment and back to a point where we can say that we're fully behind the economic impact of COVID. So I'm bullish on the rebound, but I know we have a long way to go before the job is complete.
What's going to make you, I mean, is there anything happening now that if it continues, would you say, you know, I wasn't going to change my dots back in March, but boy, oh boy, it's looking good enough. And this will be a good thing, right? If people at the Fed say, yeah, we can move this up a bit. Is there something you've seen lately, if it continues, would make you think at the next meeting, I guess the dots will be again in June, that it might be time just to alter that a bit?
Well, I see the economy is really shaping up in a positive way. And so relative to, say, December of 2020, I'm much more bullish now than I was then because we've had a very successful, after a slow start, a very successful vaccine rollout. We see people wanting vaccines, able to get them now, and that permeating across the country and across all age groups. So that's a really important development. The COVID numbers have been getting better, not worse. So those are important developments. So those have all boosted my outlook, and that was reflected in my positivity in the March meeting, of course, and going forward. For there to be more than that, I don't foresee that. We already have some indications that there are risks on the horizon in terms of some hotspots of COVID. And they're just reminders that the virus is not fully behind us yet. And while I'm very optimistic and very bullish, I do actually have a note of caution. As goes COVID, so goes the economy. And while we're getting closer and closer to having this fully behind us, we do have the last mile to earn and to get to. And so I haven't lost sight of that.
That was San Francisco Fed President Mary Daly talking to Bloomberg's Kathleen Hayes about her outlook for the U.S. economic recovery. Now let's get the Bloomberg Business Flash. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Amazon has taken a strong lead in an historic election. The vote will determine whether workers at a company warehouse in Alabama will become the first in the U.S. to join a retail union. With about half of the votes counted, Amazon is ahead by 2-to-1 margin. The Retail, Wholesale and Department Store Union calls the system broken and says it will appeal. Abu Dhabi's Mubadala is said to have started preparations for a U.S. IPO of chipmaker Global Foundries. The sovereign wealth fund has been having initial discussions with potential advisors about a listing that could value the business at about $20 billion. Barclays says junior bankers should never work after 9 p.m. on a Friday or early on a Sunday morning, except when they're staffing live deals. The London-based firm says it's reworking its policies with the aim of protecting younger investment bankers' mental health. Amid a boom in deals, Barclays and its rivals have been trying to address increasing burnout among junior staff. That's the Bloomberg Business Flash. Matt.
All right, Laura, thanks very much. Laura right there with your Business Flash out of London. Demand for semiconductors is surging as all parts of life become more digital. In recent months, chip shortages have been front and center in concerns over global supply chain. Shortfalls have been felt in industries ranging from tech, obviously, to automakers, maybe a little more surprisingly. But our reliance on these chips has also raised concerns over the industry's environmental impact. The producers, TSMC, a leader in the industry, has now overtaken General Motors in terms of some carbon emissions, and U.S. chipmaker Intel isn't far behind. Joining us now is Bloomberg's senior editor Alan Crawford from here in Berlin to talk about this story. Silicon Valley makes a lot of its sustainability, makes up a lot of its sustainability. How big of an issue is climate change for the semiconductor industry, Alan?
Well, there's just one statistic for you, Matt, that TSMC, as you mentioned, that's the world's largest contract chip maker. They make the world's most advanced chips for Apple, for example. It's in your iPhone. they account for around 5% of Taiwan's energy consumption. I mean, it's a vast amount. They're reckoned to have an electricity bill of about $1 billion. And that, it gives you an indication of the size of the amount of power that they're consuming. And in general, information and computing technology is reckoned to account for something like 20% of the world's total consumption by 2030. And of that, it's both hardware, making hardware, and also running a computer, you know, the electricity that you use. But the bigger part of that is hardware, and it's chip making. And so that in making chips, it uses an awful lot of electricity. I mean, there are huge machines, it's automated process. They use an awful lot of water, and they emit greenhouse gases. And the thing is that the more advanced each chip gets, the more of these dirty, polluting materials that they have to use.
To be honest, there's, I think, a lot of comparisons here, fair comparisons to mining Bitcoin. And one of the things that Bitcoin miners have done as they receive more criticism about the electricity usage it takes to mine is move to places where they have access to nuclear power or sun or wind power in order to reduce their carbon footprint. What are the big chip makers, TSMC and Intel, doing about this?
Well, I mean, Apple, for example, that's driving a lot of the change in the industry. That they've committed to be carbon neutral by 2030, and they, you know, companies can do things that to tackle their direct emissions. You know, for example, they can cut down on company travel. And they source their power from clean energy. But the trouble is that they also have to deal with their indirect emissions. You know, this is all part of ESG reporting nowadays. And so that means that they don't have to pass it down the line. So companies like TSMC that are making chips for Apple, they just bought the entire output of an offshore wind farm that's yet to be built. You know, Samsung, that's the other major chip maker at the leading edge. They're using geothermal power for their plants. And, you know, but it's still, you know, they acknowledge they still have a long way to go.
All right, very interesting story, Alan. And, you know, it raises, I think, also a lot of questions. For example, if these chips go into products that clean up in some ways the environment, is the trade-off worth it? I don't know the scale of each of those two problems, but Alan Crawford is a senior editor at Bloomberg writing about the carbon footprint of the chip industry increasingly growing. Coming up, Germany and France see unexpected declines in industrial production, and they are big as coronavirus restrictions increasingly harm parts of the economy that have so far proved resilient. We'll discuss that next. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are almost an hour into the session now, and the FTSE is down about 0.3%. But as I continue to remind you, it's had a good week, and we don't see a lot of movement elsewhere in equity indexes. Joining us now is Laura Cooper, Bloomberg's MLive macro strategist. Actually, Laura, even though we get to or near record highs in almost all equity indexes, we haven't really seen a lot of big swings this week. It seems like volatility has kind of come out of this trade.
Well, and it's really been quite a quiet week. We did have this holiday shortened week in Europe. We really...
Okay, guys, this is it. This is what it's all about to day trade. You just complete your trade. For some of you guys, you just complete your first trade and you made a profit. Well done. Great. Great trade. And in our case, we made £200. In your case, it's how much broker pays you per pip. Okay? This is where we close. It took us just probably half an hour to complete this trade. Great. Well done. Let's move on to next pairs.